Good. So guys, welcome. I speak in English, by the way. Welcome to this webinar, which is actually quite interesting. It covers a lot of interesting features that I haven't even used personally, because even though Dion thinks I'm an optimizer, but I'm not really very much into optimization. So that's just something that is a quite interesting topic, I think. And while I was waiting for everyone here, I actually did some optimization on one of my strategies. And I did find out that using a much higher position size than what I use is probably quite good for the APR. So if I use 10% would be better than using 5%, as you can see here. But that's jumping right in between, because I'm going to close this strategy because it's one of my best ones. And so let's get started. Who was actually the guy who asked that original question? Was that Damir? I can see you, but I probably cannot hear you. You have to unmute yourself, or are you saying you don't have a microphone?
Who asked for position sizing?
Yeah, that was an optimization sizing. That's just, that was just one strategy where you can basically optimize your position size. Let's just find a strategy that is simple enough to run real quick. Let's say, I'm not sure, this might be the one. So this is an RSI. I don't know the exact rule of this strategy. Not looking at all the strategies, but what you then can do is you go to strategy settings, and then you go to this little icon here. It is set to 10%. So if I click this, I can now say I want it to go from 2 to 20 in steps of 2. So I can optimize that position size. And I click OK. And you saw, as soon as I clicked OK, this optimize button appeared. This was active. It wasn't, I think it wasn't active before. I didn't see it, or it looked like it becomes active. And I couldn't go to that optimization settings. And from here, I have this optimization settings, and this actually just uses the position sizer. So this is the only optimization that it is programmed for, but it could be anything else, obviously. And let me see, what kind of other settings do we have? Oh, it only uses that one portfolio. So let's just use the Dow 30. And something that I honestly, for everyone who's new here, I'm a big fan of the wealth data. This is our own data, but this is really the only way. If you don't want to create your own portfolio, but you want to test on an index, this one takes out the survivorship bias. And this is fantastic because it's integrated, it's easy, and I can really suggest that, because it's easy to say, oh, I would have bought Monster 10 years ago. Yeah, me too. Yeah. And Bitcoin 20 years ago or whatever. But it takes out this bias, and that's why this is one of the big reasons why I love it. So anyway, so I have the Dow 30, I take it for 10 years. I have no idea how this strategy is, but I'm running now the optimization of this strategy here. And you can see sometimes you see funny symbols there. That was quick, very quick. And you should see the optimization now, the results. Here we are. Where are we? So the position sizes that we optimized is between 2 and 20, obviously. And the APR is pretty much stable. So it's not really, 14% was the best result. If it comes to APR, let me see. Yeah, 14% position size for the past 10 years. And and then you would have made 123,000 and an APR of 8.88%. But of course, the drawdown is also important. So we have to figure out where's the drawdown here. So the maximum drawdown down here is, well, it was pretty high then, to 21%. but actually it was high on the other ones too, except maybe this one. Interesting enough, all figures were very good, so it doesn't really matter, except if you use a too low number, 2%, then you probably don't have much of an exposure. And I talked a lot already. I jumped right into it, and I see Damir has a question.
Hi.
Hi. Am I pronouncing your name right? Actually, I have no idea.
Excuse me?
Am I pronouncing your name right?
Yeah, that's right, Damien. Yeah.
Yeah. Okay. Good.
You can
cool.
also say Damien.
Okay. Good.
I think it's easier in English.
Well, I'm German, so.
Ah, okay. Then it's Damia.
Okay. Good.
Okay. I think I'm missing the beginning. Can you show me the settings about this?
Yeah. Okay. So the first thing is, I mean, this is the general setting where we basically can say which portfolio are we testing on, or are we testing on a single symbol, which we could do as well, or can we test on a portfolio? That's the first thing.
And
then
I know this. Okay.
And then you can go and pick. This is actually a version that I just received, and then you can pick any portfolio that you find here, or you can actually create your own portfolio with 20 stocks that you like or whatever.
Okay.
And then you can backtest. I took the Dow 30 because it was easy. Plus, if you use the world's data, it is it's taking out the survivorship data bias. So in fact, you can see down here for the past 10 years, we had 41 symbols in the Dow 30. So once you have Enron out of the Dow 30, it will not be used for testing anymore. I think it was Enron or some other stocks that were really fake. So this is basically, this is where you can say which portfolio are you testing on. This is the scale, which can go down to whatever you want. I prefer always daily, not always, but anything lower I don't like much. And then I can actually say for how long do I want to backtest. It can go back 50 years if you have the data. And then we have a benchmark here, which we can hardly see, which is the SPY for this.
Okay, I know what you mean. I know this.
So you know that. So and then there's that little icon here that actually tells you that you can optimize something. And I clicked on this, and then it opens up the optimization settings for the position size.
For the position size.
So that's for the position size. There's a few other things that probably some people want to ask, but this is just for the position size. So I can now go and optimize the position size. And I think Robert is on that phone too. But this one actually just opened up. The optimize icon became active after I had something to optimize. And then I ran this optimization settings for the whole period, which I would never recommend, but for the sake of being fast, I did it. The one that I always recommend is using the optimization, the walk forward optimization. And yeah, that's what I usually recommend. So I probably would do something like 5 and 20% or something. But that's just me, that's me. That would be that's a different topic. That's not our topic today. And then I ran the optimization, the standard optimization, like everyone else does. And then I got the following result: optimization complete. And here's another very, very interesting thing, which you can easily do with WealthLab. I just love that. So in the original setting, I can't remember what it was. I think it was 10%. Yes, it was 10%. So now that I have the optimization here, and the system tells me, hey, if you would have used 14%, you would have made roughly 1.3% more per year. You think it's not a lot? here it is. It's about $25,000 more, which is a lot in the end. So, but the beauty is, a lot of people don't know that. You do a right mouse click, and then you say, run the backtest with these parameter values. So now we do a double check whether Dion did a good job, because if we run it, we should get 123,000, right? Can you all follow me? So I say, run this with this one, and it's running it. You can see it down here. Oh, it's so fast. Oh, it's 126,000. So why is this happening? Good question. Let's go down. Why is it happening? Here we go, further. Here we are. We have an NSF position count of 2.1. Actually, no, it's 2,100. And do you all know what that means? And I'm looking at you now to see you doing this. Okay, so because that means there's 2,100 trades that we couldn't take with this position size because there wasn't enough cash at that moment. But at the same time, what you could see is the result was pretty much the same. You know, it was better than before with the 10%, and the drawdown was, we have to go all the way down, 23%. So it's a decent drawdown in comparison to what we gained by using a higher position size. And how to, so there is a way how you could actually avoid these NSFs, but don't want to go there. Damir, go ahead. You have more. I can see you have more questions.
I think the interesting stuff is you did testing the position size. That's right.
Yeah. I mean, this whole topic here, I think, is about position sizing and I think something about equity curves. And the
Can you show me how did you do this? I think I did do position size. I test, for example, a strategy with a position size of 10%. But you did now test this strategy with 2, 4, 6, 8, and so on.
Yeah.
Okay. And how did you do this?
I went here, and this is the position sizing, okay? Which you can actually change manually here, easy.
That's right. Okay.
I did
put in, for example, position size of 10%. Okay. And after that, I did test the same strategy with 12%. But you did this now auf einen Schlag in one. No, okay. And show me, how did you do this?
Okay, I'll do it. You know what? I close this strategy because I want to see whether this button becomes active. So I did it like this. You want to save it? No, I say no. So it becomes the original strategy again. It was it RSI2? I think it was RSI2. Can't remember. Yeah. I mean, here we have the code, right? Which tells us all these stories. Then I went here, and this is what I wanted to see. See, this optimize button is not active because the code here is there's nothing to optimize. If you wanted to optimize, you would have to click on that setting icon. But we don't want to touch that today because we only want to see how we can work with position sizing to make the system even more effective.
Yeah.
So I go to this strategy setting. I go back to portfolio because I want to, running the NASDAQ 100 takes a little bit longer. And since Damir speaks German, I could have done the DAX, but I keep that away. And I think we have another guy here as speaking German. And then I go to that icon. You see that icon? And that makes that makes that position size here optimizable. And this is the settings that I have. And since I don't want to do step by step, I go 2 steps. So I go from 2 start value, Anfangswert, to stop value, where it stops optimizing, and increment value is the steps it takes. You know, I could take
two.
So, and then I click OK, and now you see that button, it became active because we have something to optimize. And then I go to optimize, and you see a complete new setting window. And this is the optimized settings you can use. Optimization is a complete new story, but you know, and you can see we do start at 2:22, and I'm pressed at start now.
Okay, I know. Okay, this optimization stuff, it's bekannt. I know this.
Okay,
but I didn't know that it is possible to testify the position size. You know.
Yeah. Yeah, that is possible with WealthLab. Spread the words. So you see, because of the NSF, the different, when WealthLab runs a strategy where it could take multiple positions, but it only has money for a few positions, it actually has to make a decision, and it does it randomly. You could avoid that by using, where is it? It should be here. A transaction rate here. That's it, but that's a different, and again, another different position, a different story. But here now you can see APR. We go, and then this time it's 20, and it has a much higher APR. But you can actually basically see 246. The higher percentage we took, the more reward we get for this strategy on that portfolio. And then you can actually, and the beauty is you can right mouse click and run the back test on this portfolio. And that's a fantastic feature, which is even more fantastic if you do a walk forward optimization. That's why. So now I run it, and then we'll see it. So now we'll see it. See, now you see the equity curve. And you see this is the equity curve, and this is the SPY, I think, as the benchmark. We didn't beat the benchmark. I'm not surprised, but the past 10 years is very difficult to beat the benchmark. Anyway, so that was just one way. That was just one way to do the to optimize position sizing. You know, I want to give others a chance to ask a question because I see Diego is on unmute. Yep.
I would like to learn some more about different options for position size. I mean, advanced position size, like position management, like scaling into a winner position or descaling and all sorts of strategies for opening and closing.
All of you.
No, but I have the same question as Diego.
Okay.
That is, you know, what are these position size algorithms, and which are the better ones that you recommend, and for what circumstances? And I don't know if you have the answers, but that would be really useful.
Yeah.
You know, when do you use the pyramiding, when you use the Meritocratus, you know.
You know, you honestly talk to the wrong guy. Not that
we have the experts here on the line.
Yeah, I know. Yeah, there's experts on the line here, and I'm not saying I'm not an expert. I know what most of them mean, but I wouldn't use them. So that's why I'm saying you talk to the wrong guy. I wouldn't use them because I like the simple stuff, and I think everything that you use becomes an over optimization. I see.
It happens.
Let me step in too, because the question was, you know, when would you use these? And you know, I think the answer is it's really, you know, position sizing is actually part of this. It's part of creating a strategy. You know, it's part of a strategy. So it's not really there's a necessarily a better situation than another it's really about finding the one that's going to work with your strategy. And all of these are covered in our help guide. So you can kind of, you know, I guess what I'm saying is it's a matter of trial and error, you know. Just like it is creating a strategy. A lot of times you'll think, oh, well, this would be a good idea if I would start adding, you know, 50% to and pyramiding my position size, and then you do it and you find out that it doesn't work well with your strategy, you know. So I think it's really trial and error. You know, read about them in the help guide, and there's a lot more detail about exactly what they do. But yeah, that's what I wanted to add.
Well, I think one thing, if I would approach it, the first thing I would do is I would make sure that, you know, because even if I use the the transaction rate here for my positions, I'm not, you know, I wouldn't be sure whether this is good in the future. So the first thing, the way that I would approach it is, where is it here? Percent of equity. I would make sure that I get all the trades in the past. So whenever I don't want to have any NSF position. So I want to get all the trades in the past so that I see, because I mean, just let's take a look at the results here. And okay, here we go. See here, what do we have? We had 2,300, roughly 2,300 positions, but half of them and 2,800 positions that we couldn't take. So when we want to test a position size method, I wanted to make sure that I get all the positions. And then maybe I can say I double my position next time, or I triple. You know, it's a good idea. I would look at streaks, winning streaks, losing streaks. You've seen that, I'm sure. I would take a look, like, you know, here you can say these are the, which one? The top is the oh yeah, the winning. We had like more higher winning streaks than losing streaks, because this is the losing streaks. But I mean, this makes it really complex, because, you know, you think, oh, I only had like well, in average 5 losing trades in the row, but then you would have to look at where's the positions. But before anyone says, I don't know where this stuff is. I'm not very, here we are. And then I would have to look at MFA and MAE and MFE, a number I would have to look at, because that increases the difference. You know, a lot of trades turn around, become positive if you have the MAE of, let's take the highest one.
What is MFE?
The one is MFE is the maximum favorable excursion. Like this stock, when you bought it, and let's just see, I don't know which HD, you bought it at 213, and it moved up nearly 6%. So you were 6% in profit, but then it turned out it turned against you, and it became an 18% loser. And worse than that, in between, it was down 34%, as the maximum adverse excursion tells you. And I'm not sure, and that's something you would find in the help, obviously, is whether this is taking the highs and the lows, or just the maximum.
Yes, it does. It's intraday
okay.
excursion.
So it's the intraday excursion. So in between, you were down 34% before it went back up and made 18%. So this is a number you should actually also look at. Like, this is a great number if you want to set stops. Remember last time we were talking about where to put the stops? This is a great place where you can put stops. You know, you go here, you go down, and you say, you see all these trades here became losers, all losers here. well, you don't see my finger, obviously. So that was a winner. So let's take this one. It went down 5.5%, and then it turned around and became a winner. So I would probably put a stop here somewhere around 5%, because most of the trades were losers anyway. But the point is, you know, even though they were down 5%, it actually ended up with only 1%, roughly 1% being a losing trade. And we did this last, I think, in one of our other demonstrations, where you could actually, where we were saying, where do you want to put the stop? And I think it was Diego who said 5% and Michael said 10%. And all these stops were making that trade worse than it was the earlier result, I think, as far as I remember. But and here you can see that it seems like the trades that went not far down all turned were positive. So that's a great place to look at. So I see who else is not on mute. Friedel, you have a question? Not even.
No.
Nope. Okay, Damir, any questions about that one? Diego?
When I was backtesting a lot of strategies, this rate is usually 50% or no more than 60%, luckily, and therefore I am so interested into advanced position sizing methodology, because I would like to start small and grow my investment as is profitable.
Okay, yeah. I mean, I think that's a good idea. So you basically want to say something. Let's take, I think in that case, the pyramiding. I'm not sure whether it's my English right.
Pyramiding.
So, pyramiding would be a good thing. You would basically start with 1%, like I originally said, and then you would then say if it is going profitable, then you want to increase it to 2%. Is that what you're saying?
Okay.
Well, let's try it. Let's run this. What did? Sorry, I wasn't looking. What did you end up selecting? Go back to configure.
Yeah.
Oh, did you already run it?
No. My configuration was we start with 2% and up maximum 3 positions and 50 and upright.
Okay.
Yeah.
Okay. So and yeah, I think this is probably going to get 2,000, 1,000, 500. You know, yeah. I think that's what this is going to be.
Remember, we pressed this one button here, which is important, very important, because earlier you could only take one position per symbol, one position. You know, even if let's say if you say the RSI is below 30, it could stay there for 5 days. You would actually have 5 positions. But if you click single position, you only get one position. If the RSI is below 30, at the first time you buy if you have enough money. But if you take multiple positions, as soon as it is below 30, it stays there or goes up and comes down again, whatever, then you buy multiple, could possibly buy multiple positions. We just run it.
Is it one position per symbol or one position per data set?
This okay, yeah. Obviously, it is one position per, you know, if you no matter what symbol you have, let's say you have IBM in it. And if IBM has already one open position, and then that's it. If you're on single open position, it will not open a new position. But if you are on multiple open positions, you could have multiple open positions on IBM. But everything that we do here is related to this portfolio or any other portfolio that he created or any other portfolio that you found here. So we only use the symbols that are in that portfolio, and you could find them in the data manager, obviously.
Why don't you try running this on one symbol so we can kind of follow it?
Oh, that's a
just
good
to see
idea.
if we can get the position size.
So which one do we take? Microsoft. We have a long history of Microsoft. So.
I mean, this has a really quick moving average, so it might be hard to get multiple positions in this strategy, but.
Let's see. Yeah, it's always good if you do something like this to run it on just one symbol. Well, what do we have here? Yeah, 1% wasn't a good idea then, obviously. Let's make it 5% and run it and see whether Microsoft actually generated any, you know. Oh yeah, so we have Microsoft. Microsoft had 587 positions. If you look at the equity curve, you see this dark black here. There, I zoom in. This is actually cash, right? Oh, looks green here to me. No, this is cash. So there were tons of positions that Microsoft was holding all the time. And let's go back to
Equity is the dark one, the cash is the light one.
Oh, the light one, yeah. Okay, so we could actually increase the position size by
well, that's okay. Just
you could try a similar one, that Meritocratus.
Okay. Let's use this one.
So this is a similar idea. It sees how well the strategy's been performing and then gives you a percent of equity between these two ranges. So maybe give it like 20 and, or 10 and 50 or something like that.
Here 10.
Yeah.
And there 50.
Yep.
And then we use a rolling method or not?
No.
Number of trades, initial size, percent of equity, 5.
Let's just leave it at that, and let's see.
Okay.
Let's see what we get here.
And then we run it. All right. Do I have to click anything else?
No.
Quickly. Oh, that was a jump. Wow. Oh, I mean, earlier you could see that the equity curve of I didn't change anything, did I? Let me see. Did I? I'm still running on Microsoft, and that I could immediately see that this was a big jump. You could see that too, right? This is
look at open positions. Click on open positions there in the middle and see how many we have it. Right, the checkbox. Yeah, the checkbox right above the equity curve in the middle.
Yeah. Went back to open positions.
So you can see that we have up to 3 positions open at the same time.
Yeah.
Usually 2.
Yeah.
Okay, and then.
So you can see it starts with I'm zooming in. You know how to zoom in here? You keep the mouse from the top left to the bottom right. Let's do it again here. And then you can zoom in, and then you see basically this is a 1 position and it goes down, and here's a 1 position, and then it goes to the 2nd position. That's how you can basically visually verify whether it's doing what you wanted to do. And here it actually, I don't know how it jumped up to 3 positions. Must have been, it probably had all these signals. So this is really helpful to verify what it's been doing. So we had 1 position, 2 position, then it goes down, exiting. And here it goes from 1 to 2 in a very quick time period. It must be it must have to do something with the position rule that we have.
The strategy buys if it's below the moving average and below RSI values, right? So if it's below those two values, two bars in a row, it's going to buy another position.
Wow.
I just talked to Eugene on Skype, and he mentioned that pyramiding position sizer, your strategy needs to set the signal name to whatever's matching in that configuration dialog. So it's like a little bit, a little bit of something you need to do in the strategy to get it to work.
Yeah, but
so
I would be happy.
We weren't seeing anything there.
So
but with this Meritocratus, you could even, this will apply on the whole portfolio. So
wow,
you can,
this is really interesting because as I can see visually, and I don't know what and how it did it, it is actually beating the benchmark. The drawdown curve is much lower, and well, this is probably something I have to look at. Yeah, I mean, you could see the red one here is the drawdown of the strategy, and the white one is the strategy of the benchmark, which is the SPY, I think, at that time here. And it's really, as you can see, this is amazing. Take the open position out, we've verified it. It goes very much smoother. Here you can see that when the SPY was going down, this was actually, still up there. So that was really good. And here
it's really a question: is this a problem, or is it a feature of the underlying, or is it a feature of your algorithm? So I would check with different equities.
Yeah, we should maybe, good point. We could actually check it. You mean like a different benchmark or different?
No, different symbol.
Okay, let's take the Qs. How does that sound?
You could even run it on the portfolio.
Yeah, I just do the Qs. It's faster, and see. I mean, it's, on the Qs, you see the equity curve is still smooth, but it's not as profitable as the overall market. And I want to do one more that is, which one is really very well? Microsoft, Facebook.
But Dion's trying to say something kind of important here. We set up the strategy to take multiple positions for the pyramiding. Maybe go back to one position per symbol and then run it on the portfolio, because the Meritocratus will figure out, oh, okay, Microsoft and Cisco and these were winning trades. So it looks over the whole portfolio and then starts sizing the positions based on how well it's doing, right? So
wow.
So the sizing is going to change based on how well the strategy is running over multiple positions.
Wow, this is amazing right now. I'm pretty amazed right now about this feature and this tool, and I have to investigate it more. So I changed it to single positions, and I run it again.
Run the portfolio. Run it on portfolio.
On portfolio. Okay, good. Sorry.
Yeah.
Get strategy settings, and I do the Dow 30 then, or
Yeah.
okay. And I have it on single, and I run it.
Yeah. Now, and when you're done, what you'll do is look at the sizes for the position. But go to the position positions page.
Yeah.
Now let's look at the sizes. Maybe do a sort on where
Sort where?
What do you go to the left, I guess, right?
Yeah.
Should the dollar size?
I don't think we show the position size as a column here.
Oh, we don't have a dollar size there?
I don't think so.
Oh,
I have to. I would probably have to multiply this by this.
Okay.
Yeah.
Sorry,
Yeah.
I thought we had a dollar size there.
Well, I mean, I could use the simple ones, which is probably 77,000 here. Yeah.
Well, but now we're messed up by date. So yeah, actually go by date. Go by, because we want to compare the ones that are close to each other by date, right?
Okay.
So let's
Okay,
see. So we have one that's,
so this is about 51,000. And then
Yeah.
we go down here.
yeah, the
and
one right
see-
before, well, the one right before that was like 70,000, right?
Yeah, this
Yeah.
is 70,000. And this is pretty much, yeah, here you can see actually, you know, and this is just a quick, you know, visually kind of thing. 1,400 stocks we bought at 50. So it's around 70,000. But on the next trade, Microsoft, we only bought 1,088 at relatively the same price. So it actually adjusted the position size real quick for whatever reason. And as I said, I don't even know what this position size rule is. I would have to read it, but it does it really quick.
It looks at how profitable the most recent trades were for that symbol.
Oh, this is great. Yeah, this is what I
And
always
if
wanted.
they were profitable, it increases the position size. And if they weren't, it decreases it.
Perfect. It's basically a survivorship of the strongest. So the good stocks for that system get more money to trade with, and the bad ones get less until they come back up again. Is that what it is, basically?
Yeah.
Yeah. Good. So yeah, this is this would be definitely a position sizing rule that I would look at especially at the portfolio level. But as you could see, even on what actually happens if I change it to multiple open positions? Or then first of all, I would actually look at the exposure we had, 65%. Yeah, that's quite a high number, but I still want to run it. So did it improve it or not? No, didn't improve. It was good here, but then all the way flat. So you can see the effect of money management, and yeah, that's
I think, Volker,
yeah.
just since you're running it on a portfolio, you might want to go back to the settings of that position sizer.
Okay.
Because we had configured it running on a single symbol, but if we configure it now to something that would make more sense for a portfolio, like maybe 5 to 20
here
instead of 10 to 50, yeah.
5 to 20. And
so that means each trade will get a maximum of 20% of equity.
Which is already a lot, but okay. And what is about this one? We keep the 75 or reduce it to 50?
No, you could keep that at 75.
Okay, good.
What is referred maximum probability to?
So I think the way that I understand it is that the minimum equity each stock gets is 5%, but if it's doing really good, it increases it to up to 20%.
Yeah, that means if the recent trade was within so it takes a look at the history of the trades that it made, and if the recent trade was within 75% of the highest profitability of all the trades, then it'll give it that 20% maximum equity. So it's kind of a way to tune the whole thing.
So is that actually, Dion, really jumping from 5 to 20, or is it doing it in incremental?
It's doing it in an incremental way.
Okay, yeah, which makes perfect sense. So can I leave everything else in the setting? Use maximum percent of equity?
Yeah, you could leave everything.
Okay.
That rolling method is something that Eugene added, and I'm not even sure exactly what it's doing, but yeah, he thought it was important.
And I put single positions, right?
You could try either way.
Okay, I'll try this one first. And I find it amazing how fast it is. That was now, what was it? single positions. I go on multiple positions. And here we go. So you see, I mean, again, it's the effect of multiple, the effect of money management. And I think what we have not done here, and that's why the green one is changing all the time. See how it is changing? We have not used transaction rate because it seems like this one is actually having a high percentage of NSFs and not sufficient fund. Yeah, a very high percentage. You see, you have a position count of 3,000 and you have a NSF count of 9,000. So that's a high percentage. There's a lot you can do with the position size. As you could see, we could run the same strategy on Microsoft and it becomes really very good and powerful.
I mean, I mean, a lot of this depends on the strategy too. We picked RSI2. I mean, maybe we should quickly open a different strategy and try the position size around there. Like maybe, I don't know, like the knife juggler or maybe even that 1% a week. Let's try that.
That's here recent. Is it in here?
Yep, scroll up. 1% a week. Scroll down.
Yeah.
It's in alphabetical order. So 1. Yeah.
I'm pretty bad in alphabet. Okay,
so here you can maybe set up the Meritocratus. It'll be interesting to see.
Okay, so we go advanced position size. Yeah, it's good to, you even can control the drawdown. This is also in, and then
So let's make it like 25 to 100 because we're going on one symbol here.
Oh yeah. Everything else I leave as it is.
Yeah.
So it's on the TQQQ daily data, and we use all data, and I can run it.
Yeah.
I don't know why it jumps there. Wow.
It's depending on how you have them configured in your preferences and your backtest preferences. You can reorder them there.
Yeah, okay. And remember, this is the unobfuscated that Eugene sent me, so it's not my settings here.
Yeah.
Anyway, yeah. Oh, this is amazing. This is good. Well, I had the drawdown is actually decent for a strategy that makes, in the end, has an APR of 32%. I mean, this is
nice.
Yeah.
But you have a margin factor in there. That's right.
Well, we could.
1.5.
I think this is mainly, Dion, correct me too.
Well, you can look at the strategy settings and see if we have a margin factor. We might have a small one. Yeah,
you have 1.5.
Just a small one, just so that we can, if in case there's a gap up, we want to make sure that we have enough cash to take the trade. But you can see it's not really going on margin at all. Otherwise, there would be some, some excursion into that lower below zero there on that graph. So it's not really going into margin. So margin interest, let's see.
Above, below, I think below.
Margin interest.
Margin.
Margin use.
So yeah, it just use a very little. I mean, maybe you wound up probably losing, maybe only 1 or 2 trades, but yeah, wound up using very little margin.
Can we talk about the slope of equity curve just here on this report?
Okay.
The first line on the report.
Here.
Yeah.
Okay, yeah, that I don't know much about. Dion.
I mean, that is if you go on the equity curve. And if you were to draw like a linear regression line over it, you can imagine how it would slope upward.
Uh-huh.
So that metric is just giving you the slope of that linear regression line.
So I don't, it's nothing I can draw here.
No.
It's just something that is in the metric report.
Right.
And so it's interesting. Yeah, you can see basically the benchmark has 93 and the equity curve has 536, which is like 5 times or even 6 times maybe more. So what exactly is it that you wanted to know? Is it something that can be implemented into a strategy? Is that right?
I think, you know, and we've had this discussion like 3 sessions ago with Mark. What's the metric in an optimization that gives you the, smoothness of an equity curve? And can this be the one without having to go in and back test each line like you have done in order to see the curve and to see whether it's a curve you like?
Well, I mean, kind of doesn't Sharpe ratio, I think, kind of give that. I mean, it encompasses the deviation as well as the profitability of the, I mean, that's kind of the industry standard, the Sharpe ratio.
Yeah, I think it was, but I think there was some problem with Sharpe ratio. Can't remember what it was.
Well, I mean, that's what all the hedge funds, measure themselves on.
Yeah, I agree. So, I wouldn't know, because who created that slope equity curve? Was that you, Dion, or was that Eugene?
Well, I did. It was just a request. People wanted the slope of the equity curve, so I just added it.
So it was you, Michael, huh? Who requested it?
Yeah, I think it was Mark actually who suggested he was providing some ideas, but I don't know where that was.
Super Ticker.
And he's on the call, so he might have. Maybe Mark, you have to say something.
Is he on the call? Oh, he is. Yeah.
Yeah,
he's muted. Is a mute.
Okay, so he might be not available right now. So, but yeah, and he I mean, he knows quite a bit of stuff, so he might have had an interest in why he wants that. Maybe it's easier to compare results. I have no idea, and maybe it would be interesting to see. I would probably think that this equity curve would go from here to there, right, Dion? Would that be a straight line? Kind of.
Yeah, pretty much.
Yeah, so it would be something to look at. For me, interesting enough is that this strategy right at the end, it became actually quite good. So that's quite interesting. It was doing good before as well. And I zoom in so that you can see it. Come on. So this is the zoom in. It was like below and then it came up again. And there you can see this is until 2020. And when the market was actually going down, it was actually doing really good. See, the market is going down here. And then it actually even shooted up on all these other little, I'm not calling it a crash, but it's a little downturn. So yeah, this is an interesting method, and we actually did change the position size on this one. So
do we have NSF position there? Here.
Let me see. Go down here. No, none.
Yeah, so we're only running it on one symbol.
Yeah, it's on one symbol, so there's no real NSF, and and I think this is a strategy that is included here in the in in WealthLab, right, Leon? It's one of the standard.
Yeah, it's in the sample strategies folder.
Yeah. Oh yeah, it's actually yeah. I remember you just created it a couple of weeks ago. So yeah, those are the, and this one is actually in the C# code. So you, for those guys here who like to look at this kind of stuff, it's this is where it is coded, and it's not one of these strategies that are created by not changing it, like this one, which is basically a. No, I thought this was a. What did I do? I wanted to open this one. The gap closer. Oh yeah, it's also a t-shirt. No, shouldn't be. Okay. Yeah. So that's those strategies come with WealthLab. And this is a very popular one for those who have been around for a long time, the 17-liner. This was a community work back in the, well, early 2000s, where they came up with, one guy came up with a strategy, and then other people, you know, added another code and added another code. And that was an interesting project by the community, the 17-liner. And I don't know how it is doing nowadays, but I can actually check. It definitely needed a volatile market. So just so that, since you showed some interest in the strategy, let's do 20 years. And I think we need to do percentage. I need to really low because it is adding positions. So we run it just for the sake. I find it amazing. I mean, you could see that the NASDAQ 100 now in World's data is using 278 symbols instead of the 100 symbols. If we would run the same strategy on the NASDAQ 100, the current NASDAQ 100, it would be, you know, it would be mind-blowing. It is mind-blowing even if you take the survivorship bias out, whereas like many strategies, it had the drawdown just recently here. But it seems like over. But I mean, look at this metrics, 25% APR, great, really good. This system has been around for 20 years. So basically this is I think, maybe 15 years around here. So this is the out of sample run for this strategy. You can find it right, Dion. It's like a long time ago that this was published.
Yeah.
So actually we're over our time. We're already 75 minutes in the time. So if you guys have more questions, Damir, do you have a question?
No.
Nope. Yeah. Friedel is there, my two German-speaking friends.
Maybe can you tell me something about the forward optimization, the walk forward?
Yeah, and you know what? Because we've done that, and what I wanted to offer you and maybe Damir, we can have a 30-minute talk one-on-one if you want to in German.
Yeah,
so that,
of course.
So that we don't have to, you know, you can ask me questions and I can answer them in German, which is probably easier, because we've done that walk forward optimization before, and I would love to do that. And if you want, we can do it tomorrow at some time.
Yes,
so,
it will be fine.
Yeah, I mean, I would do one with you and one with Friedel, if that's okay.
Yeah, great.
Yeah. I sent you an invite on Calendly, which actually gives you some dates, and then you can basically book me, and then we talk for 30 minutes. Does that sound good?
Okay.
In German?
Great.
Because we're already 15 minutes over it, and this will probably This will take
Okay.
15 minutes.
Okay.
And we
And,
talk about the walk forward optimization, or it doesn't matter. Maybe
I call
coding?
you, or you call me, and you ask me questions. And if they, if you don't want to talk C#, because I'm not a C# guy, I don't know anything about programming, but
Okay.
I know a little bit here, here and there. And but if you want to, if you guys are if you want to talk C#, we have to get Dion on the call. And and by the way, for the German guys, if you're somewhere near Frankfurt, Dion, you will be there next week, right?
Yeah, we already have a date set up.
I know.
June
We
7th.
have, yeah, June 7th. We have a date with one guy from the community in Frankfurt, and if you guys are somewhere nearby or want to join, then you're gladly invited, and we can talk stuff. It'll be a relaxed gathering, but
I think we have about 4 people already who are going to come.
really, oh, okay,
Yeah.
didn't even know that.
Check
That's cool.
Yeah, check the forum.
Wow,
Yeah,
interesting.
it includes me. Thank you.
So
That's
you
a great idea.
You come from Switzerland.
Yeah.
Wow, excellent. Yeah, great, cool. Oh, guys, I'm running out. My battery is running low.
Have you picked the restaurant?
No, I haven't picked the restaurant. Let me get my power here back on. Yep. No, I haven't picked the restaurant yet. We'll come up with something, and yeah, that would be great meeting each other. But Damir and Friedel, we will definitely talk before that. Yep. And then if you want to come on next week Tuesday, meet the super guy.
Which time?
Do you
have a time on the 7th June?
Oh, it's like 7 o'clock evening, Dion, something like this. 6 o'clock.
Yeah, like something like that, just around dinner time.
Yeah. Okay. We'll send out, or yeah, we'll keep you posted. Apparently, there's something on the forum which I wasn't aware of it, and yeah, and then you can think whether you want to join. That would be awesome. Mm-hmm. Yeah. Good idea. Yeah. And as I said, Friedel and Damir, we talked earlier, and I'm there to answer all your questions.
Okay.
So Volker, I have one question. I'm from Austria, so I do speak some kind of German too.
Yeah.
Maybe I can join this German thing tomorrow.
Oh yeah. No. It's Friedel. We talk Friedel right now.
Yeah.
Yeah. No, I call you and we will talk one-on-one for 30 minutes.
Okay, so this is Marcus now speaking, Marcus Schana.
Oh, okay. Wait, I don't even. Oh, okay. Sorry. Yeah, I call you too.
Oh, that would be great.
Yeah. Sorry, I didn't see. You're even further down. There's so many people down there that I have to press. There's so many people in that call. I didn't even see you there. It always stopped at Friedel when I scrolled down. So, yeah, I put you on that list, and you guys can pick an appointment, a time and a day, and then we can talk more stuff about WealthLab. That would be really great. I would love to.
Yep, great.
Yeah, nice. Thanks.
Yeah. And of course, everyone else who's in English. I mean, I think Supatika, who's not here anymore, I think, but maybe I'm overlooking him. But I think, Michael, you'll meet each other, and you don't need that anymore. But anyone really welcome to talk. Okay. Diego, we can do the same thing. I send out something to you, but my Portuguese, I think you speak Portuguese, right? Yeah, you probably better talk to Robert, who speaks Spanish.
Yeah. I speak in Dutch.
Oh, very good. You can come to our meeting.
I would love to, but I'm pretty far away now.
Yeah, Dion takes a long flight too, jump on the plane.
Sure.
Yeah, so that's, yeah, maybe one day you come, okay?
Sure.
You've got to make some money trading. Okay, guys, it was really nice talking to you. And you know, some of you I will meet personally, and some of you will I call this week or yeah, the next few days. Okay.
Thank you.
Bye.
Good session.
Excellent.
Okay.
Thanks.
Thanks. Yeah. Have a great day and play
Okay.
around. Talk
Bye.
then. Bye. Bye.
Bye.
Bye.